boom, boom, boom. I gotta go get my water too. I've got to go get my water while you guys join. By the way, the futures have turned positive. Let's see. I gotta go over to YouTube, and we'll go live. And I gotta turn down the volume. Okay. Let's just check Active Trader Pro. Okay, Active Trader Pro is working. Let's see if I expand it out. There we go. We'll do that. Bum, bum, bum. Safari doesn't matter, I don't think. I don't think if I move Safari around it makes a whole big deal at all. Oh, we're going to do some scans. Let's see. GNS is way up. Our shorts here. Let me move you over to Active Trader Pro, and let's look at some of our shorts. There is FFIE, which is not a short, it's just a crazy stock that has been trading a crazy amount of volatility. That's FFIE. Let's look at ATER. I've got all these in the notes down below. ATER is one that has had some crazy short volume. CV, the old eyes. CVNA, this is Carvana. It's crazy. This one has gone nuts since Friday. There's yesterday. This is Monday. I mean, it just opened up at about $7 and ran all the way up to about almost 11. Right now it's at 1065. So we'll take a look at that one. Bed Bath & Beyond. If you weren't on YouTube yesterday and didn't see it, we played this one for a 10-minute, like 10%. I mean, I had a triple bar. It was clear as day. This one's been losing momentum ever since. We got LICY, which seems to have, there was a distribution. So yesterday, late in the day, it moved from $10 up to $14 really quickly. I thought that one was over. Beyond Meat, I have my fingers in the wrong place. Beyond Meat is one that seems to have gotten some fairly good interest last week, but has since lost it. So it could bounce back. PBLA, this is one that could be enormous. It's kind of come off this $3 down to $1.50. This could go back to $3. So this is here's the story. Panabera Therapeutics. Shares rose 42% to $219 in pre-market trading. Filing showed Lind Global Partners reported a 9.9 passive stake in the company. So it's at 179 right now. That one's a big one. GTII is one that I saw that some people think, I mean, in the pre-market, it's moved. This is one that, I mean, it's a micro. So far in pre-market, only 964 shares have traded. But yesterday, you can see yesterday, this is a 5-minute candle, but this is 125. This is 127. And 127. It's Friday. That's Monday. Yesterday went crazy. CRTD is another one. I think fair. I like the car. I mean, there's no production. There's not even a. I don't have they built. I've only seen the renderings. I don't know that they've necessarily built one. If they built one, God, I need to look that up. But FFIE is a Faraday. I believe they will get to production. And if you didn't see it, by the way, the biggest scam in the world is General Motors. General Motors announced that 2023 will be a record year for the company. You've got to be fucking kidding me. I mean, Mary Barra says that with a straight fucking face. I mean, honest to God, every other car company is like 2023 is going to be tough. We're heading into a recession. And Mary Barra gets up there with a straight face and is like, yeah, 2023 is going to be a record year. And all of a sudden, the stock is up like, 5, 6, 7%. It's a $40 stock. I mean, if she's going to continue to do that, then you get to actual earnings. It's a $30 stock. Trade it. Just trade it. I don't think Tesla was necessarily affected by it. Let's see. Did Tesla go up? It's down at 164. But we'll take a look. Let's take a look at some scans now. And by the way, Brandon, just FFIE, I would be careful of this one. And I'll show you a long-term chart of it. I don't know what you're in at, but my guess is between 50 and $1 is where it will trade prior to news. It's got a 30% short interest as of the middle of this month, which, by the way, that's probably significantly larger. It could get a squeeze if it gets the retail trade involved, and I think that's what you saw when it popped over $1, was the retail trade. So I'll take a look at it from the long term here. FFIE. 80 cents average, right around even right now. This is the algorithm that has you in at 32 cents, ironically. But you can't tell this stuff. Like, we should have gotten in on that day because it was a slow hike up. But this is when retail traders get involved. You're over the 200-day. The 200-day is just moving kind of straight across. If you get that 50-day crossing, you do have some type of positive. But take a look back here in July. It didn't last very long. I mean, you had the golden cross right there. It just didn't last very long. And essentially right afterwards, you're almost putting in this kind of a chart there. If we go and we look at I don't even think a weekly is going to, weekly doesn't really get you. You get that button hook on the bottom. And you get this around 30 cents. That's why I say between 50 and $1 is probably your bet here. The problem is, again, it's not making money, but I don't think, as long as it's a small amount, I don't think you're throwing your money away. I think you're doing fine. But just realize that is a Hail Mary stock. It's everybody wants the next Tesla. And so everybody thinks it's going to be a car company. But the next Tesla could be Microsoft, to be honest with you, with their Chat GPT investment. All the futures have turned positive, by the way. No energy names. Levered ETFs. DRV got one. SPXU. SDS. Okay, let's see. Yeah. I called him Britney bitch too. By the way, Brandon, meet Brandon, a.k.a. Britney bitch. TRV. SPXU. I fear a street brawl. I don't know. Oil plays today. It's an interesting observation that Exxon, Exxon's at 114 in the pre-market. Blowout earnings. Blowout earnings for Exxon. By the way, anybody get in on UNH? This one popped. It's at 496. So it's putting in this kind of between 480 and 500. Pretty well. Pretty good floor right here. Morning, Zephin. But the levered ones, SDS is what? Ultra Pro, S&P, Ultra Short. Oh, this is the Pro shares. And XPXU is the Ultra Pro. What's the difference between the two? SPXU versus SDS. SDS is designed for 2 times leverage, okay. Whereas XPSU is 3. Okay. 3 times. 3 times. There's the nanny next door 2 times. Okay, but both crossed up. Yeah, Fed interest rate right now is 4.25 to 4.5. Both crossed up, so we should see. I mean, you've got if earnings are coming down like everybody. I have J&J. I don't. Medtronic, I think, is a good one. I think they're the ones that do the ventilator machines and other diabetic stuff. Stryker's not bad. Yeah, J&J. The problem with J&J, and it's not really even a problem, is that lawsuit yesterday took them down. I am not adding to my J&J, but every time there's a dividend, I just add to it. So I think it's putting in this floor. Are you upset if you bought at 166 up here and now it's 172? Are you upset that you bought at 170 and it's now 162? Not if you're holding for a shit ton of time. Yeah, Weiss is not done. I went over that one in the pre-market. Hold on, guys. I gotta be right back. Nanny. Sorry. One thing, morning, Bill. One thing I have to bring up, I have to put this in my notes, is Samsung announced record. Why is this? Don't use. No. Where was I just putting this? Record. Oh man. Record slow down in mobile phones and PCs. So short-term hedge might be by, let's see, short Apple ETF. Let's see. Leveredshares.com. Let's see. What does this show me? Performance. No, I agree. What the hell? What the fuck's the symbol? You know what? Screw you. Oh, listings and tickers. Fees. It's 0.75. Let's see. Risk scenario, UK Deutsche index. Okay, we're gonna have to go over here. We're gonna go boom. I'm gonna look direction. AAPU and AAPD. I'm looking to see if there's a. That's AAPU, AAPD. There also is 3 times short ETF. They seem to be on foreign markets. This is US AAPS. Does AAPS come up? Let's see. No. See, it's got to be on US markets. This is on the London market. So, short Apple, AAPL, ETP, fund type. We're looking. Granted shares 3 times. Short Apple ETF, US. Let's see, NYSE. Bloomberg. See, it's covered, but Direxon, there it is. APD, AAPU. I think that's all you have here in the U.S. If you guys know of any short Apple stuff, look it up. I'm gonna go back to doing Yeah, 3 times short daily Apple. See, this 3 SAP, it's on the United Kingdom market. It's not on our, US market. So you'd have to buy it foreign. You're going to have fees. It's probably not worth it. Okay, I'll put AAPD because we can look at AAPD here. Let's see. Bear. I only have this one. Long Apple Daily ETF, Bull. There's one time share, AMZD. That's Amazon. Emerging markets, Google. AXS, I don't see another one. Yeah, I don't see another one. GM, yeah, Justin, you may have missed it. I just called Mary Barra the Jim Cramer of the car market. She hyped. I don't understand what GM is doing, because they're a car company that has gone bankrupt more than any other car company and has been bailed out by the United States government, meaning you and I, at least twice that I know of, probably more throughout the years. But she said 2023 is going to be a record year. How? Tesla just reduced their prices. They had more demand than anybody in the market. I don't know. How does that work? How do you go from 2023 is going to be a recession, which car companies do horrible with, to 2023 being a great year? I just don't know. I mean, I'll wait till she says something. She has a call with probably Jim Cramer. Mary, you're leading the electrification of America. We've heard that before. We know that you guys. I ordered my GM. What do you order? I ordered my wife the Hummer. She loves the Hummer like she likes the Baconator. Douche. Altria continues to cross up. I don't know why. General Dynamics crossed up? Ooh, looky that. You got that death cross coming. But boy, this one doesn't spend a lot of time down below that 200-day. Yeah, GM, a stock that you can trade. I think it's a $40 stock. Government Motors. But look at this one. This one does not spend a lot of time below this 200-day. If we go, let's go to a weekly for General Dynamics. See, the only other time that it was below the 50-day was July of last year, which was a low. September/October of last year, which was a low. It did spend this time 2020, most of 2020, because, government funding. Was government funding anything other than COVID during this time? No. You just saw it kind of trickle down. And ever since then, since we kind of, vaccines came out and boom, we're going to spend more money on other stuff. Look at that. So this one's an interesting one. I'm going to put this in as a buy. Because General Dynamics, let me see. Let's just see what their PE is. It's 18. Not horrible. Performance year to date down 8%. Initiated coverage Citigroup 298. They're trading at what? 228? 238 is Credit Suisse from October 12th, 2022. So that was when they were trading at 213. That's where they've come down to. January 31st, General Dynamics for year 2022 earnings in line with expectations. Let's see, Wall Street. This one usually doesn't give you a lot of stuff. They just had earnings. Did they just have earnings today? Let's run the strategy tester on this one. Bum, 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 bum. Larry. They had earnings 24th. It's an interesting one. I don't know. I mean, I like it. I like it a lot. Okay. So Brandon, historically the PE for, I use 17 as my historic S&P PE. So it really depends on the industry that you're in. So if you go over here to look at, you look at Microsoft, for instance, they're expecting growth. Their PE is 26. You look at Amazon and their PE is 92. Just, depends on the growth, depends on the company. You look at GM, their PE is 6. You look at a Ford, I think their PE is about 5.8. You look at a company like Visa, and their PE is 35. Just depends on the growth, depends on the industry. I use it as a guide to basically say, okay, Visa's growing. I mean, you look at their earnings per share, 24% this year, next year 14%, 15%. Past 5 years, they've grown 20% per year. That deserves a PE of 35. You look at Amazon, for instance, and they're growing at 54% this year, 75%. Past 5 years, 67% they've grown. So they deserve a big PE. Tesla, they have a 60 PE. Their earnings per share last 5 years have grown up 48%. The next 5 years, they're expected 25%. So they get a good PE. So it really kind of depends on what you want. You want to look at it. If you really want to look at you look at consumer cyclicals, and then let's see. This is if we go to FinViz. I'm just going to go to FinViz, and we go to home, and then over here you can look at this and find your company in the S&P 500. And if it's not in the S&P 500, just Google it. But you can look at, like for instance, if you wanted to know Microsoft, if you wanted to know consumer electronics, semiconductors, if you wanted to know them, just look up those companies. You can look up Berkshire B. I don't know if they have a PE, but the banks, healthcare, if you want to know what healthcare is, you can look it up. I would just average it out. And I think there's let's see, historic PE of each company. There's a website that will do it. Here's the S&P by each year. You can see 21.48. I mean, these are estimates. 23, 35. The average is 17. I think it was it. Schiller PE ratio, price to book value. You can look it up. But this just gives you the 1871, 11, 12, 11, 10. You can see it's gone up with growth. You can see where was it? Let's see. 1968, 17. So you get into the 17s where it was considered expensive. Then you get to the 1992, 25, 22. And it gets to be super expensive. 99 is 32. 29, boom, you crash. 27, 46, 31. Yeah, and everybody's screaming, it's too rich. Housing crisis, 2009, you go to 70. It just, it's all over the place. But You can do, there is so much out there on, Spotify jumps. Let's look at Spotify. I'm going to look at Spotify. Spotify. Boom, boom, boom. 9 o'clock. It is 9 o'clock. Wow. Spotify. Remember how I said, I don't like Spotify. They're paying me too much money. They're up 10% at $110. Let's go back and look at they're not making money. So it's in my mind a risky one, but God, the buy is December 21st, 78, and you're at 110 today. You're way up here. You got your golden cross right before earnings. Okay. I am going to go and do the podcast now. If you are here, I forgot to do it. Hit the thumbs up button. If you're on YouTube, I am going to start my podcast now. And for anybody that's new, this is TrendSpider. The link is down below. If you sign up using the code DSP25 for 25% off, you will get access. I will give you my algorithm. And when you see this price of $78, this is the algorithm that told you to buy Spotify at $78, and it's at $110 today. You'll get access to that algorithm. You'll get access to all of our watch list, which is the core investments by the podcast, energy names that we trade, levered ETFs, low-cost Vanguard sectors, and the Spider sectors. I'm going to develop some other ones as well. So sign up. Once you sign up, just send me your information. I'll confirm that your email address is attached to my code. I do get a commission. I don't get paid for you signing up. But here's the difference. I just posted in the private Facebook group. And if you want to join the private Facebook group, it is free. I don't charge for a damn thing. The only thing you're ever going to get charged for is TrendSpider. I don't charge for anything else. I ask if you make money, you tip me, but I'll do a stock look at for you for anything. I don't even care. I'm not here to make money. I've got my own money. I am not a 22-year-old kid who's looking to make money off of you. I am looking to help you, educate you on stocks, picking stocks, identifying runners, making sure that your investments are strategized, and making sure that you're optimizing your money. That's it. 100%. That's it. I have no other agenda. But if you sign up for TrendSpider, then when I go on vacation, you can do your own freaking podcast and look and do the scans that I just did, because you'll have our lists for everything. And I'm going to create other lists. But wow, the markets just took a big, big turnaround. Yeah. Wow. General Motors is at 38. So here, we'll look at General Motors, for instance. Where should you have bought General Motors? Yesterday at 37, ironically. You're at 38 and change right now. But look at that, at 33, and you're going to be above the 200-day. You're probably going to 40, I would assume, with GM. Once they really start hyping things. The one that they did announce, and I'll go over this, is they put almost $700 million into LICY. And LICY in pre-market is up. And this is Lithium Americas. They're going to build a plant in Nevada. LICY is up 10% to 2380. So that takes you up into this area right here, which covers the gap. Ironically, it covers the gap. Look at that buy, January 5th, and then you cover the gap. If you have LICY, get the F out of LICY. It is not making money. It is coming back down to 18. So sell it today, rip it. Their earnings are coming out March 1st. Okay. I'm going to start the podcast because I got an awful lot to go through. And I did promise where is, I know I had somebody say something yesterday. Following growth stocks, what Powell says. Wolf Research, Dan Niles, Satori Fund. Where did I put that damn? I had a voice message from somebody. I think it was Justin or somebody yesterday. And I know I wrote it down. I'm just not sure where the hell I wrote it down at. Okay. Where is it? Let me look. Maybe I wrote it in yesterday's notes. I am not. Oh, should I? Let me do the energy sector scan. I'm going to do an energy sector real quick. Because Exxon is up and Exxon just killed it on their earnings, my assumption is that we may have a couple of energy. BTU, which is the Peabody, which is the coal play, it's kind of been hanging out there. We'll say BTU. BTU is a good one. I like this one. Big dividend. BTU. I don't like the Travel America. These things always show up because it's just, I mean, it's crazy. That is an ugly, ugly chart. By the way, Costco over 500. Still continued on this run after it covered that gap there. We will run this one. Watch. This is crazy. Brandon, I appreciate when people tell me that, because honest to God, I don't want to take anyone for a ride. I don't need your money. I love when you guys give me tips. Because here's the thing: when you make money, I consider me a bartender. That's all I ask. I don't want your money. I don't want $400 for my Discord group. I don't want anything of that. Oh, there it is. ABML and plug for Justin. Okay. Voice message from Justin. I don't want any of that stuff. I don't need any of that stuff. It's nice to have. It's nice to, know that, when you provide a service, it's nice to get paid for it. But if you don't make money, I will lose you as much money as I will gain you, most likely. Nobody knows what's going to happen in the stock market. Even my algorithm, like for instance, Costco here. My algorithm makes you 61%. If you bought and held Costco, you'd make 41%. You've got 22 positions over 1,000 candles. 1,000 candles, my algorithm's based on a 4-hour chart. So it gets 2 candles per day. So 1,000 candles is 500 trading days. You only have 22 positions that you got in and out of within this. Your average win is 10.99%. So you win 61% over essentially almost 2 years. It's a great, great thing. Costco, in my mind, I don't think you can time it that way. So 41%, I'm perfectly happy with. And that's why I have this core portfolio up here, is if you want to trade in and out of these, say you have some of these in a retirement account. So it's not tax advantaged. For instance, I have one, Moderna, which is just a nightmare of a holding stock. This is one you trade. It just got you out with a 2% loss. But you know what? At 187, you went all the way up to 200. Don't be greedy. Take your profits. When you start to see it lose confirmation like this, take your profits. Would I be upset if I bought it at 187 and maybe sell out at 180? No, because if it comes down here at 130, I'll just buy it again. This is one, the algorithm doesn't do as well, but the reason is, if we go back and look at Moderna, it started at such a low price. The algorithm won't do well when you start and you buy at 15 and you're all the way up at 180. Even though you went to 400 and almost 500 here, I think it was, 497 was back here, 2021. So the algorithm isn't going to do this. But you know what the algorithm does? It saves you a lot. So for instance, a big move like Oxy, we can look at Oxy. And if we look at a weekly of Oxy, and I have this in the core portfolio because energy is just a good bet. It's making money. But see that drop right there, the algorithm would have gotten you out. And you would have saved yourself a hell of a lot of money. And when it starts to come back, the algorithm gets you in. The algorithm plays in a safe space, a super safe space. So it's not going to get you runners. It's not going to get you anything. But the other thing that the algorithm does is it teaches you how to look at stocks. And I've had so many people message me that have gotten TrendSpider, have gotten my algorithm, and then built their own algorithm. All the algorithm is the strategy tester. And I'm going to put out a video later this week. I hope later this week. I interviewed or had TrendSpider come on with me on a Zoom call, and I'm putting the final touches on it. I just don't like it so much right now. But I'm going to start the podcast now. But remember, if you're here, just hit that like button. It helps a lot. So let's look at some of these stocks. Good morning. It is Tuesday, January 31st, and I got a lot of stuff to go over. Let's go over the news first, some of the earnings reports. GM reported earnings. And let me get to my notes because it's up about 5% at about $38 per share. It reported earnings per share of $2.12, which was way above the guidance or the estimates. What's really pushing it up about 5-6% is the guidance from GM that 2023 will be a quote-unquote banner year. That's absolutely ridiculous. If we are going into a recession, there is no way cars will be sold at the prices that they're currently selling. There's no way they're going to hold margin. This is a company that has been bankrupt way more often. They have said they are leading the electrification of America. Anybody that has any eyes open on the electric car business knows that's 100% not true, and they've sat there and said it with a smile. Do I believe that 2023 will be a good year for them? Absolutely not. This stock will probably trade up to $40, and you'll be able to buy it at $33 again. I hope that a short ETF of GM comes out just like the short of Tesla comes out, because this is just a great trading stock. It is one of those, when you get down here in the low 30s, you just buy it, ride it up to 40. I mean, honest to God, that's all this stock is good for. One of the things that they did say was they are putting in $650 million into Lithium Americas. LICY is the symbol for this one. This is one our algorithm got you in at $18.91 back on January 5th. It's not one I cover. This is not one that makes money. But what's interesting about this one, had I looked at this one, I would have seen it. I mean, it was clear as day. There's a gap here between 23 and 23.76. This one's up at 24 pre-market. So it's basically covering this gap. I don't suggest you get into this one today. It could probably go to 29 or 30. But it's not making money. It's not the risk. You will be below 20 at some point in time. It's going to be touching this 200-day, and you'll come down below the 200-day. But that was the only good things that came out of that GM meeting was, hey, they're investing in lithium. Exxon killed it. Absolutely killed it. Their stock is close to a 52-week high. They're trading it down about 1%. It's just because it's run so much. This is in the core portfolio. So I still hold it. The MACD's kind of crossing down. The 9 days got this button hook. If you wanted to get out of this one, I would not say, fight you on this one. The 52-week high is 117. Do I think it's going higher? I think so. I just, again, I've got this in a taxed brokerage account. It is long-term. My average share price is in the 30s. So if I sold this, there's a tax event. So I'm just kind of hanging on to it. It'll reinvest the dividends. Am I worried about it going down to 100? Not really. I mean, the price of oil is just going to continue to go up. China opening it's just going to continue to go up. The war in Ukraine with Russian oil, there's going to be additional sanctions. It's going to continue to go up. So I'm not particularly worried about this one. McDonald's announced earnings, and while their overall sales were down, they were able to make more money based on higher prices. McDonald's is a stock that I think is close to its peak. I would say, if it gets back down near 240, buy it again. This is not in our core portfolio. I am a fan of McDonald's when I am driving on the road. I am not a fan of it any other time. I love it. Listen, if fast food were healthy, your boy would be all over this stuff. The fruits and vegetables, it's not as good as McDonald's. Don't let anybody tell you that it's as good as McDonald's. Just creates this euphoric brainwave in me that it just makes me happy. Just makes me happy. One of the reasons why McDonald's is down, though, in pre-market is they did say they're seeing and they expect continued inflation pressure. So one that I wanted to bring up early is Pfizer. They announced earnings, and it was kind of in line. This one has had this is in our core portfolio. I'm probably going to take it out after listening to yesterday's. If you don't listen to the All In podcast, it's basically 4 billionaire guys who play poker together who just talk about the state of affairs. It's a lot of politics. There's a pretty mixed set of politics between liberal and conservative. They are some big players in that political field, so they know some insider stories. It's great to listen to. I just find them super, super entertaining. What was interesting about it is they were talking about there is a revelation that Pfizer may have known significantly beforehand that their vaccine did not prohibit transmission of the COVID bacteria, or whatever it is. Like the polio vaccine. The polio vaccine basically wipes it out and prohibits transmission. That's what we were told at the beginning. Today we know that the vaccine does not prohibit transmission. It lessens the effects. It most likely probably prohibits some transmission in that you don't have it for as long. This is not a knock on the vaccine, but we know that when they told us that if you get the vaccine, you won't transmit it. Well, that just wasn't true. And that was part of the learnings of this, but it's come out that Pfizer knew about this well before they disclosed it. Listen, Pfizer's in this to make money, and they're making billions and billions of dollars off this vaccine. It is not a huge player in their portfolio. Makes me kind of not trust Pfizer as much. And what was interesting about this, and this is why I might take this out of the core portfolio and I might actually get rid of my Pfizer, is those 4 guys on the All In podcast, again, across the political spectrum. That's why this has no political boundary whatsoever. There is no political statement here at all. All 4 of them said they will probably not get boosted again. Simple as that. And there is one guy who's in biotech who is super, super educated about this stuff. And there's also another guy, Chamath, who is pretty intelligent. I think he's a scam artist on some of the SPACs that he's laid out there, but I think he's pretty intelligent. And so for me, with Pfizer, with their earnings coming in, I'll probably wait till it gets to about the 47 level. I see this gap between 46 and 47. I don't know that it's going to get back up here to 50. It might. They might sell a bunch of stuff to China, and you might see it back up at 50. But I'll probably wean my way out of this and buy some other biotech company. That's probably where I'm going with that one. Joe wanted me to look at Puro stocks. I'll probably look at Puro stocks on YouTube Live, not necessarily on this one, because there's quite a bit of stocks. He owns the stocks, blah, blah, blah. Here's my take on this week. And we all know huge earnings week, Google, Amazon, Apple, they all report later. Powell, the Fed meeting is today. He speaks tomorrow. Tomorrow at between 2 and 2:30 is probably the most dangerous time to trade. That's when I see volatility and I'll follow the market. I might trade live while he's actually speaking because you could probably use those levered ETFs to make yourself 5-10% while he's actually speaking. But what Powell says is going to be dangerous. We'll probably hear a very similar message. Now, the expectation of the market is a quarter-point hike. If we get anything else in the news that comes out, I think it comes out at 1:30, 1 o'clock, somewhere around there. If we get any other news, expect the market to just react like crazy. The last Fed meetings that you saw, even though what we got was what was expected, the market just freaked out. But I think we're going to hear similar things about the job market. And here's the way I see the week going. So Wednesday, you have Powell speaking, which should move the market. Thursday, you have the big tech earnings, which should move the market. Friday morning, you have a jobs number coming out. That is the January jobs number. If the jobs number is super strong, expect the market to tank. So here's my game plan on this one. If Powell speaks and does move the market, trade it. If the tech earnings move the market, trade it. If the jobs number comes out and it's either strong or weak, trade it. You've got trading opportunities Wednesday, Thursday, and Friday. Today's your day to do your research and understand that you could do this. The Wolf Research put out a note yesterday that says this is just a bear market rally. And we're kind of seeing the turnover of that. I talk a lot about button hooks. And you're seeing that button hook right here in the SPY on the 4-hour. If we go to a daily, it's a little less pronounced of a button hook because you only have one candle on the daily. Yesterday's candle was the first negative one. It's still above that 9-day. So you do have a little bit of a button hook. I'm not ready to call this one over yet, because I do think that you get over this 200-day and it's kind of pronounced itself over the 200-day. I think you have to wait, A, for Powell, B, for the tech earnings, and C, for the job market. The Wolf Research note was aggregate earnings per share is the smallest and the guidance is the weakest for years now. So that's why they're saying, hey, the market. I think once we're through Friday, I think you've got your clear direction of the market. If we're going down, you're going to see it continue to go down. If we're going up, you're going to continue to see it going up. I think once we're through Friday, you get a clear direction of the market. Right now, you've got a clear direction. It's up. It's up. If we continue, you're up here at covering this 420 gap in the SPY. You could get back up here to the 440s. But again, it depends on Wednesday, Thursday, Friday. Yesterday, I traded live, and some of you that watched saw Bed Bath & Beyond went into a crazy, crazy squeeze. And we had what's called a triple bar. And I posted the video about how I learned about the triple bar and how you can identify a triple bar on the upside and the downside. And Charlie from Zip Trader posted that video. I posted in a private Facebook group. If you're not part of the private Facebook group, just go to the link tree down below and you can click on that. And there's a Facebook logo right below my picture. Just click on that, ask to join. The one question is, who hosts this? My name is Gary. If you don't know your boy yet, my name is Gary. So answer that question, you get admitted to it. It's private because I keep it private. I kicked out 2 people yesterday for posting inappropriate things. They were trying to hijack it with crypto and probably scammers. So I do keep an eye on that. If you want to be an admin, by the way, and have some admin rights, just let me know. I think there's a couple of people that I trust in there. So, but yeah, if you want to be part of that, just go in there. I post some things. I posted a pretty good video yesterday that I took on Snapchat that some people liked. So slightly inappropriate, but it's fun. I got a voice message on the podcast yesterday from Justin. He wanted me to look at two stocks, ABML, American Battery Technology. This is one that has been a ski slope down, but it has been a super up of late. The algorithm got you in at 48 cents here, January 5th. This is one, the only reason this is going up is because every other stock that's been beaten down is going up. There is no other reason for this. And if you believe Wolf Research that this is just a bear market bounce, get the F out of this one. It is not making money. You do have confirmation, and you've got big confirmation on this one. It's trading at 64 cents. It went all the way up to 74 cents yesterday. And it's down at 64. The MACD is super high. The RSI is at 59. If you're in this one, the volume has taken a leg up specifically yesterday. You can see that the volume is trending down on this one while the stock is actually going up, which is a fairly good move. You're above the 200-day, but the last time we got into this area above the 200-day was October. You went above the 200-day, and you immediately went from about 80 cents within about a week period. You were down at 60 cents. This one at 48 cents, maybe a buy. ABML, let's look at it. This is I'm in FinViz looking at this one. Do they even have a FinViz thing? I don't think they do. No, they don't have anything on FinViz. It's a tiny stock. I'd be careful with it. If you're in it, my personal opinion, when it's under the 200-day, you can buy it if you want to take a risk on it. When it's over the 200-day, I'd probably sell it. That's kind of my thing on this one. And I think other people, it's a meme stock. People are looking at it that it's got some news on it. If FinViz isn't covering that thing, be careful. His other one that he wanted me to look into is Plug. Now, I drive an electric vehicle. I'm so pro electric vehicle. There's nothing better than getting on a highway and some douche not letting you merge in and being able to just floor that thing and take that guy out. This Plug Power, again, December 30th, $12 buy-in. You had this button hook. The algorithm does not have you out yet, but it's close to getting you out. I can tell you at 15, 17, it's close to getting you out. That $12, you've made your 20%. If you're in there at that point, I would say you're definitely using this 200-day as a resistance level. The last time it got here was August, it looks like. Let's look at a weekly because I don't even think it's going to have – yeah, it does have a 200-day. You had this huge rise in this all the way from $227 up to $63, and you've just continued to pull back. If we go to FinViz and we look at some of the fundamentals of Plug, they're not making money. Their price to sales is 13, which is huge. They're expected to grow 51% this year. Next year, 39%. Year to date, it's up 27%. Your 52-week high is 32, which you're 50% down on. Your 52-week low is 11. You're at 15. You're right in the middle, kind of right in the middle. I don't know, last UBS said $26 price target. They initiated with a buy. Concord Genuity in October said hold. They moved it down to 16. So you don't even have any kind of, analyst that agrees on this thing. There's no real insider buying, but it's hydrogen and zero emission fuel cells. Other than the chart looking like a bit of a mess and it's about to turn over, I would say that, if you're in this one and you believe in it, continue to hold it. It's just not making money, and it's probably more of a gamble than an actual, you could put money into GM and probably make, a better long-term decision than Plug, just because it's a risky one. It's just a risky one. Dan Niles of the Story Fund thinks, again, this is the same thing as the Wolf Research. It's a bear market rally, and nothing has changed. He thinks most big tech will bring the earnings down. Wanted to bring that one up. We got a cross up on our favorite real estate short, DRV. This is a 3-time real estate bear. We had just had a cross up on DRN. If you want to know how just crazy the market is, DRN, I think it was last week on Friday, January 26th, I had a buy at 12.19. You're at 12.04. Therefore, the triple levered bear fund gets a cross up here at 42.33. It's trading at 42.51 right now. I don't know 100% which direction this kind of ETF is going in, but we did have a cross up there. I posted it in the private Facebook group, posted it on Instagram, I posted it on Twitter. If you're not following me there, do it. One thing that we traded a little bit yesterday, not much, GNS. This one, crazy new highs. It went all the way up to $7 yesterday, I think. Let's see. It was $7 yesterday. This one is a short squeeze, 100% a short squeeze. They did a spinoff to try and kind of pull out the short squeeze, just like APE and AMC did. The rally is probably, it's just news. I mean, that's all it is. Let's see where it is right now. We'll go to GNS on our Active Trader Pro. GNS is trading at oh man, Active Trader Pro is at 523. So its day range is 501. It's at 523. I don't know. Does it have? Let's see if it's got any kind of confirmation on open here. It doesn't. I mean, it's just kind of there. It's like all the rest of the short squeezes. It's just kind of going to play. I've got a list below of short squeezes that we can look at, that you can look at on your charts. And they're from Zip Trader. There is GNS, ATER, CYNG, BBBY, which we played yesterday, WISA, WISA. This is an interesting one, WISA, because they have a reverse split coming. Or it actually was already initiated. So they're up at like the $11 range, and it was a 1 for 100 share split. The algorithm has you out, doesn't have you in. It's at 11.79. The MACD is kind of crossing. The RSI is no man's land. But the reverse split, just be careful. The reason they did a reverse split is to not get delisted. That's the only reason. Beyond Meat is another short squeeze, BYND. PBLA. This is one that I think Charlie believes could be huge. Panbala Therapeutics. There is a gap here between $1.70 and $2.66. There was a reverse split, 1 for 40. Back here on January 13th, your RSI is as low as it could be. Read up, do your due diligence. This could be a short squeeze that comes back up here to $3. But remember, rule number 1 is don't listen to a douche on the internet. Do not listen to a douche on the internet. Do your due diligence and learn this stuff. The other ones are GTII and CTRD. Samsung announced their earnings today, and they announced a record slowdown in mobile phones and PCs. So Apple, I mentioned it before, Apple is reporting on Thursday. The one kind of, remember, Google, Android, their number one phones are Samsung's. So if Samsung says, hey, our phones are being sold less, it either means Android phone, cheaper Android phones are being sold, or maybe phones are just not being upgraded in the cycle that we expected. COVID did bring, Apple even said COVID brought some things. So if you believe this, and I am not one that would short Apple, the only reason I would look to buy AAPD is because you're getting this button hook that I talk about all the time. That MACD looks like it's crossing up. The RSI is at 38, and AAPD is the only short that I know that's traded on the NYSE. If you guys have another symbol, let me know. I will cover it. I will look at it. This one, the algorithm makes you 9%. Buying and holding makes you 8%. This is a levered ETF. I would not hold this one like you think that you're buying Apple. You are not buying Apple. You are shorting Apple. This actually has no asset value whatsoever. They will take a ton of fees from this thing. There is a gap here between 28 and 29. You're trading at 27 right now. The only reason, and most of the listeners know, I hold a ton of Apple. Multi-million portfolio. 40% of this stuff is in Apple. I think it's between 30 and 40. I don't know. But it's a lot of Apple. I sold my first Apple on a tax loss harvesting in December. My average share price for my sale was somewhere in the neighborhood of $4 a share. That shows you how long I've traded it. I posted on the on Instagram last night. There was a tweet of a classic thing. You guys may not be old enough to know who Regis is. Regis and Kelly, I think. Kelly and Ryan this morning. Well, when the iPhone first came out, they were mocking it. Boomers mocking the iPhone. Let that be your first lesson. And if they had not mocked it and bought the stock, that was 2004. Crazy good. But AAPD, the only reason I would buy this is not to hold it. It would be to hedge against my position. That's the only reason I would do it. Weekly stock pick. His stock pick this week is CAT, C-A-T. I bought it 263. It is at 251. They reported earnings, strong earnings, but kind of like I had said yesterday when we traded this one on YouTube Live. I don't mind holding this one. I bought a very small amount. I think it was 2 shares. So it's like $500. It's not a lot of money for me. I bought this one because weekly stock pick. If you don't know him on Twitter, just look up my weekly stock. We can look up here. Let's look my weekly stock. Because he has a newsletter that you should absolutely 100% subscribe to. You can just click on that Substack right there and subscribe to it. His performance has been phenomenal this year. Phenomenal. He gives you all kinds of recaps and things of that sort. So I think you should subscribe to him. This is his pick this week. I think he's lost one so far of the 5 or 6 weeks that we've been in this year. Okay, UPS earnings, they're up in pre-market. UPS, they announced profits, but lower shipping amounts. So actual shipments for the holiday were down, but they were able to do higher prices. So they made more money based on higher prices. It's trading at 182. It's up a little bit today, 1.89%. They approved a $5 billion share back deal. Snap reports tonight. This is an interesting one because we will find out how the ad business is and how Snap has done. The algorithm got you in at 867 on December 23rd. You're at 1123. You've got all the confirmation in the world going into earnings. The RSI is super high at 72. There is a gap here between 1226 and 1243. Another gap that goes all the way up to 16, followed by another gap that goes all the way up to 21. This is a company that, are they making money? Let's take a look. I think they are making money. No, their forward PE is 33, so they are still super expensive. You're up 23% year to date. It is 73% below its 52-week high. It is 51% above its 52-week low. But you can see on this chart, it is just crazy. It's made a double bottom here at about $7. That would be the buy. If it comes back down to $7, I would be buying all day long at $7. But here at 11, going into earnings with that RSI so high, you're really rolling the dice. But it will be a good kind of vision on Pinterest, which I think reports later. Let's see, pins. Pinterest is the one. Elliott Management took a position in Pinterest, and ever since then, it's just been on a skyrocket. Their earnings are coming up February 6th. And you're seeing that the MACD is a little bit high. The RSI is at 50. It's got this ascending wedge triangle. It is above its 200-day, which is at 24. It's trading at 26. I wouldn't buy into this one, but we will find out more tonight. You could expect, if Snap is positive and things are good, you could expect Pinterest to be up as well. Just kind of saying that. United Healthcare. I have been pounding the sand that at under 500 you buy it. It's been at 485. It is over 500. It is up 3% today. Anybody else get in? This is one buy and hold. I will sell it when it gets above the 200-day probably, because I'll be able to buy it, I think, back down here. Healthcare was one of the largest segments that grew last year, along with energy. So don't expect it to be a huge grower this year. There are certain stocks that will grow. This one in particular is expensive. The reason I got in is because I don't mind holding it. I really don't mind holding this one. If you tell me that it's down at 480 again, am I upset? No, I'm just buying more. It's a super well-run company. But when you look at this one, UNH, the PE is 2022. For instance, you look at another one in the healthcare space, Cigna, which is managed healthcare, 14 PE, 1.44. This one year to date is down 6.33%. UNH, let's look at UNH. They are down 8% year to date. It has a 1.36% dividend. So I like this one. Again, over 500, you kind of look to sell it. Under 500, I think you look to buy it. Let's look at some of the scans. We went over DRV. There are some other triple levered ETFs that went kind of crossed up as well. SPXU, which is a 3 times levered against the S&P. And you can clearly see there's a gap here between 17 and 18. You're trading at 1455. The cross up was at 1466. My opinion, even though it crossed up and the algorithm could make you some money, you have 36 positions within 1,000 candles. You win 17% of the time. So it's kind of like a 1 in 5 roll of the dice. Your average win, though, is 12%. If you think this is a win and you could go up and cover that gap, take it. But my suggestion, we got Wednesday, tomorrow, Fed. We got Thursday, tech earnings. And then we have Friday jobs report. Between those 3 things, if you see the Fed come out and we all of a sudden crash, this one's going to skyrocket. If you see earnings come out weak with the tech sector on Thursday, this one could skyrocket. If you see the jobs report being super strong and Powell said we're going to focus on the job market, this one could be super strong. So SPXU is 3 times. If you want something that's a little less risky, SDS, which is 2 times levered. This one also had a cross up at 41.99. The 50-day is still moving down. You got the same kind of gap up there. It's just 2 times levered instead of 3 times levered. So one that was interesting and I wanted to look at is General Dynamics. This is a defense company. It has been beaten down. They announced earnings on January 24th. They had a pretty good earnings. It is below the 200-day. It's got a gap up here between 250 is kind of the top gap. I wouldn't expect that to be hit anytime soon. But what I really wanted to take a look at was the weekly on this one. Because when I was doing the scans on YouTube Live, I was like, okay, how long has this one really been below the 50-day? And what does it do when it gets below the 50-day? Well, you can see here in 2018, that's kind of when the rates were raising and Congress was talking about cutting costs. Then it rose back up above the 200-day. Then you had COVID, and it just got killed until we started spending on stuff other than COVID. And when the vaccines came out, you saw this one move up. You had the Golden Cross. This was selling at about 176 when the Golden Cross happened, and that 50-day has been moving up ever since. The past couple of times, July, when you had a pullback on the S&P, this one pulled back under the 200-day. Immediately went back up. October, where you had the S&P lows, this one pulled below the 50-day, immediately pulled back up. That's why I bring this one up, is not only do you have the gap in the algorithm, but you're below that 50-day on the weekly. So it could be, if you wanted to get into the defense sector, because this one crossed up, it might be a good idea to get into this one. If you're not in the defense sector, I'm not personally buying this one. I don't particularly think that buying something that's dependent on killing machines and doing that stuff, it's not something I want to invest in. You can see the spike in earnings. You're kind of seeing the dovetail on the earnings kind of take off downward. But I think you have put in this base at about 220 here, between 220 and 230. So GD is one. I scanned the energy sector, and one that came up is one that I have recommended before. I think this is a Tom stock. BTU is one. 2782 is the buy-in. You're clearly using this 200-day at about 26 as its support level. It is expensive. Their earnings are coming up February 10th. It's got a really good dividend from what I remember. No, it has no dividend. This is Peabody. The PE is 3. Year to date, you're up 3%. 1 year in this one, you're up 144%. Earnings per share this year up 115%. They're only expected to grow 4%. This one could be back down into 20 range. It is super high up there as far as when you go to a weekly. So it's gotten the benefit of being a coal company where energy is just at a kind of a peak where you're seeing prices. China's down on coal. China needs more coal. Peabody's selling more coal. They're able to use their price, supply and demand to increase their prices. So they're making more money. Does it have a huge growth factor to it? No, not at all. But BTU is one that I think it's put in this bottom at about 20. So 27 is not hugely expensive, but just realize that its 52-week high is 33. So your tops, if you get back to a crazy, hey, coal is short, we're selling more, we're making more money, $33 could be it. June 22 was the last analyst. Hold to buy. Jefferies moves it from a $25 to a $36 price point. October 21 was the one below that. Really doesn't make any sense to look at those price targets, but that's around $16 and $22. So it's right there around that, other than Jefferies of June of last year. So you can read these stories on FinViz. Insiders have not been buying, which always scares the F out of me. So January, you've had some fairly big sales, nothing huge, hundreds of $1,000s, not millions. But in December, Elliott Management, which just took a ton of stake in Pinterest, said, hey, we're taking our money and getting out. This is hundreds of millions of dollars of sale. So do with it what you want. I typically follow a little bit of the money. I think you could trade this one. I don't think this is a long-term hold. Just my opinion. There was some talk of Tesla. Tesla is up today, 168. It does have this kind of button hook that's happening. You've got this gap here at 146 to 154 with GM saying, hey, 2023 is going to be a record. That's probably why you're getting a bounce in Tesla. Honest to God. It's the only reason. You could go to the 200-day at about 197. A few days ago, it was at 200. You could get that, but that MACD is so high up there. It's getting that button hook. The RSI is at 70. I wouldn't buy into this rally. I'd probably wait until you get down. The 50-day has started to turn positive. So the rally has some legs on it. You're still above that 9-day, which means you have confirmation. If you wanted to short this one, TSLQ is the short of this one. If you think that button hook is just too big and, hey, I want to short this, TSLQ, look at that MACD. It's down below the oscillator, and it's turning back positive. The algorithm does not have you in there. There is a gap above between 60 and 63. You're trading at $54. That would be the one where if you think Tesla's going down, The only warning that I have for anybody that thinks Tesla is just too expensive based on PE is Tesla has been expensive on the PE ever since it kind of came on the market. And anybody that's tried to short this has lost billions of dollars. Billions of dollars they've lost. They have been wrong just based on the PE. And everybody has been wrong based on the PE. Here you are back in 2018. I bought my car right here where the stock was at 21. I'm what, 6 times? Like 8 times. 8 times where it was. And that's cheap because shit, you were up at 25, which is what, 20 times? 10 times, somewhere around there. Yeah, 10 times. So, my point is, do not underestimate Tesla's room to grow. The retail has been huge in this. And when retail starts to buy this, that's when you see a ton of volume come into the market. These options have displaced most options. I think it's the most traded option outside of SPY on the market right now. Look at the volume. I mean, the volume is driving the price up, and most of that is retail. It's not big money. Your RSI was down here at 17. Should have bought at 100. You'd be at 170 right now. So that's my warning on Tesla. I think I covered everything. 40 minutes, pretty good. If you made it this far, make sure that you hit the 5 stars if you're on Spotify. If you're on Apple Podcasts, just rate me. Go into the library, put a rating in there. I don't think I have a lot of ratings, but it would help. And if you listen this far, there's no reason not to do 5 stars. If I make you money, remember, tipping me is like tipping a bartender. If I make you money, throw me a couple bucks. I don't need hundreds of dollars. And if you don't have the money, do not tip me. I'd rather you spend the money on yourself. But if I made you money and you like the content, throw me a bone. If you want TrendSpider, I cannot recommend this enough. TrendSpider is the way I learned. TrendSpider is such a great tool. I'll have that video up on how to use TrendSpider. I think that could convince you. 25% off using code DSP25. I will give you my algorithm, which is a backtesting strategy. Doesn't predict future, but it does help give you a guidance of the past. So if you have any questions, hit me up on the socials. If you want to join our private Facebook group, I've got some fun stuff in there. I'm going to be trading on YouTube Live. By the way, if you're listening on the podcast, there's a link tree down below. You can go to that link tree. Just go to the YouTube. It's a gentleman's agreement. If you've listened this far and you've already rated me, go to the YouTube channel and just hit subscribe. Just hit subscribe. Gentleman's agreement. I give you guys all of these stocks. I don't charge you. I just posted in the private Facebook group. Some guy is charging $400 for his Discord group, and he's got a ton of subscribers, which makes he's making a fortune. I'm never going to charge you guys for a group or anything like that. No. I mean, TrendSpider. The reason why I'm pushing TrendSpider is because you can become a good enough investor/trader using TrendSpider. It's a tool. I'm not selling you a Discord chat where you rely on me. When I go on vacation, I'm going to work Major League Soccer this summer. I won't be around. I won't be doing some podcast every day. Maybe I'll take a couple days off to go hiking. Maybe I'll take a vacation. Last year I went on a cruise. I didn't do the freaking podcast. I had people complaining to me. Well, you know what? You're going to complain again. If you get TrendSpider, you're completely covered. You can do your own podcast. So that's the difference between me and a Discord group. I'm going to charge you for tools, not necessarily just a trigger system like Kramer does. Wow, General Motors is up at $40. Yeah, so I'm done with the podcast. If you want, tune in on YouTube Live. Every day you can just scroll in. We're about an hour in right now. So, and if you're on YouTube Live, just hit the thumbs up. Okay, take care, guys. Okay, if you are on YouTube Live, by the way, right now, hit that thumbs up button and make sure you're subscribed. There's a lot of people who aren't subscribed. And now I got to go through all your freaking chats because I saw you guys chatting. And now I think I think everybody's focused on triple bars. It is an awesome strategy. Let's take a look. And here's the thing that you have to know about a triple bar. I am done with the podcast VRO. You got to tune in sooner, man. Let's see. I'm going to restart Active Trader Pro because this fucker's not working. Yeah, we'll save it. Why not? Triple bars are never an absolute, but when you see it, I mean, we'll take a look at yesterday's. The reason I ran for my my laptop was yesterday. I mean, that triple bar was as good as I've seen on Bed Bath & Beyond. Journaling my trade yesterday, I should have gotten in at about 280, 290. I got in at 303. And I should have gotten out at about 330, and I got out at like 320. So I didn't. You can't. That's kind of, you can't time the market. You can't time these things and say, well, I absolutely should have done that. The guidance is don't be greedy on the top and think that you're going to do it because you may miss it. Identify the trade before you get into it. I wanted 10%. I should have had 10%. I think I wound up with about 7 or 8%. So, I'm in on meme ETF. Brandon, you big dumb bitch. GNS is going for a run. GNS is going for a run here at 549. I mean, you've got, okay, so here's what I see about GNS. The MACD crossed up here, and you were trading at about 540. I'd say the low was about 518 during this time. It crossed up. Say you got in at 520, and you're at 550. It crossed up. The RSI quickly came up. Right now it's at 58, 59. So it's being over. It's kind of dropping as we speak. And the MACD is kind of crossing down. You can see the MACD. I mean, even on a 5-minute chart, you could play the MACD. But this is kind of baby bar-ish. The high is 579. The low is 547. So it's not quite 10%. It's about 7 or 8%. So it's not super baby bar-ish, but this one being below it, you're not going to get a triple bar. It's just going to kind of come back down here into the Bollinger Band. Even though the Bollinger Bands are expanding, the next bar is going to be the big one. You do have this volume shelf up here at about 558, 562. You're trading right in that range. And my Active Trader Pro is just not working real well. It doesn't work with this. I probably should be on my MacBook Pro. But let me see. Hold on one second. I'm going to shrink this down. Okay. When I shrink that down, that's what's funny. I guess it's showing that ooh, that bar just turned green. Yeah, one more minute. It's red. GNS is going to be a hype play, and part of it is because the CEO, they basically did a distribution to try and out the short sellers yesterday, and it's similar to what APE did. AMC did with APE where the shares are just worthless, but they're forcing them out there. And he's trying to out all of the short sellers. Okay, you had a green candle on that one before, which means you could be going for a run back up to the 580 on this one. Oh, come on. Why is my garage band? There we go. Oh, no, I don't want that. I'm going to shrink that down. I don't know what you guys just saw on the screen, but GarageBand was just a mess. Quit. Save. I think you're going up to 580 on this GNS. I'm going to go to Anchor. Bum, bum, bum. And I'm going to go back to, once I upload this thing, I'll let me upload this, and then I'm going to go through your chat. I'm going to do a transition. Which one do I want? I'm going to scroll down. Is this one good? I like that one. Lord, what about Lord Weasel? No. I like Denzel Spark. We're going to put that one in. We'll insert the ad, and then I'm going to go look at your things. Bum, bum, bum. GM has good earnings. Let me look. Oh, man. You guys are chatting it up today, too. Show. Playing Call of Duty and listening. Just call me dumb bitch Brittany. Good morning, Zephin. I'm in healthcare. Brandon, you work on ventilators. Mike, I hit my bait. Text, it's a trigger in the algo today. Let me look at TECS. What is TECS? I don't even know what it is. Technology. Honest to God, I don't think it's a bad play. Let's see. Let's see. It's triple levered. IXTTR is provided by S&P Dow Jones. So here's where it targets Microsoft, Apple, NVIDIA, Visa, MasterCard, Broadcom, Cisco. That's interesting. So Microsoft already reported. Apple is yet to report. NVIDIA doesn't report this week. Visa reported good earnings. MasterCard reported good earnings. Broadcom already reported. Cisco reported. Texas Instruments reported. I don't know why it would get that bump up, but I can't say that it's not a bad one because the gaps up other than this at 47 have been filled. Like these back here, they've already been filled. Oh no, that's an interesting one. GM had good earnings, cheap per GM. Yeah, GM is one. By the way, CAT is down another 5%. Jesus, it's at 247. I bought that at 263. Your boy played dumb. So yeah, GM is up at $39. You've got this small gap here at 41.46 to 41.77. So, lost all of it. Oof. Sorry, Larry. I went over the PE, Brandon. I also work in healthcare. Be careful. BOXL. What's BOXL? Boxlight Corporation. Here's Boxlight. It's touching that 200 day. Wow, this has been a nice trade since December 30th. I don't even know what BOXL does. Boxlight just sounds like technology. They ain't making money. Their forward PE is 6.89, so it's not super expensive. Earnings per share next year expected to grow by 166%. You're right in the middle of your 52-week range between 26 and 142. You're 41% up this year. There is no coverage whatsoever. Let's see, any insiders. Insiders sale. Yeah. Insiders are taking some money out, but they're also putting some money in at very small amounts. It's a super micro cap. I would be, Kevin, I would be super careful of BOXL. And let's go to Active Trader Pro because it's probably a trade, not necessarily a investment. GNS, it hit the 580 mark. 586. Remember I said it's going to hit that 580? 586. This one's got some pretty fucking good momentum with some volume. Let's look at BOXL. You can get hurt on this one just because it's probably got, yeah. So your 10-day volume is 465,000. Your 90-day volume is 359,000. It's only got a $30 million. It's a microcap company. You've only traded for 700,000. It's trading on the tenths of a cent. I don't know that I'd look into it. McDonald's is so good because salt, fat, and carbs. I mean, Mike, I love McDonald's. Yeah. And I mean, honest to God, when I'm on the road, man, I tell you what really triggers my taste buds is fountain soda. I love it. Let me see. Where's Meme? Mike's busy playing Call of Duty and investing in meme stock. I mean, this is trading thousands of shares, 6,020 shares. Why would you be in this? There's no reason to be in this. This is like the Kevin, that like Kevin dude. He started an ETF. Is there a triple bar on Tesla? What time frame are you looking at? I mean, there could be a triple bar on a daily. Remember, triple bar is just no. So this bar right here, it went from 165 to 169. That's not a big move. That's like less than 1%. Tesla's not one at these prices that you could get the 10% move like you did with Bed Bath & Beyond. If you're going to really gamble on Tesla, options is the way to go. I don't trade options, but it's kind of the way to go. Smoking my pen and listening. Dabs for AXP is a great stock. I don't have an American Express because I'm too cheap. But with their report of earnings, I mean, God, let's go back to Safari, and I'll show you AXP over here. AXP is amazing. I mean, look at that. The only thing I would worry about with AXP is this gap down below between 165 and 155. Let me go. I think my dog's got to go. You have to go outside? I'll be right back. What do you want? Do you have to go out? You have to poop? Is this just you being annoying, or do you actually have to poop? Do you just want to be petted? Come here. Come here, I'll pet you. Come here, Penny. I'll pet you. Come here. There you go. Come here. Come here. Oh, geez, my little girls. There they are. I love you both. Okay. Sit down. We'll call the vet afterwards, okay? I gotta get all this stuff off your eyes. No, relax. 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 Any reason why I am not in UNH today? Jackson, UNH, I've been screaming about UNH for the past, 2-3 weeks? God. UNH, you don't buy it today. Did it gap up today too? It gapped up today. I mean, you're going to see a gap between 491 and 495 unless it hits 491 today. So you're going to see a small gap there. You're 200 days at 520. You're 50 days at 500. This is one that you just buy and hold. When the algorithm says get in, I'm going to buy it. I'm going to hold it. Any reason why BOR, BV, XY, and TOI have high analyst price targets but are trash stocks? Yeah. So, here, we'll take a look at one of these. BIOR. So, analysts hope and pray. This one's not making money. And I don't see any price targets on that one. But let's take a look at another one. BVXY. I don't even see that one on FinViz. TOI. Initiated 22, $7 and $10. You're trading at $1.49. Mark shares floated 55 million. Analysts just love. I mean, look at the price targets here. I'll show you. Look at the price targets on Apple. 153, 160, 170. You're trading at 145, and it can't break that 145 mark. So, BVXV. Let's see. Oh, pop up, stop it. I don't see any price targets. But biotech, all they have to do is be right about one, and then CNBC writes them, invites them on and says, "You were right about this one." Ignore Webull targets. Ignore Webull targets. That's Webull targets are not. Let's see. I'm gonna go into Webull. Who called me? Oh, that's nobody. Webull, and I am gonna look up BIOR. Okay. Time and sales, order flow, large order, short interest. I don't see a price target on here. Analysis. Strong buy. Analysis price target. Yeah. Between 60. The average price target is 82. They don't tell you where they got these price targets from. They 100% do not tell you where they got these price targets from. And I can click on that, and that very well may be, Christian. Analyst rating based on two analysts. Two analysts rated it. Well, who are they? They don't tell you. This is what I'm talking about between a good broker like Fidelity versus a broker like Webull. This is why I'd have my money in Fidelity all day long and not necessarily Webull. I have money in Webull. Don't get me wrong. I have got my money in Webull. I've got $1,000 in there, which, by the way, is down below $1,100 for the first time. I was at $1,200, I think, last week. But let me see. I'm going to do an indices check right now. So the market is up 0.15. The NASDAQ is up 0.5. And the S&P is up 0.40. Let's see. I am at 0.4. So I am just performing with the S&P, underperforming the NASDAQ. Two minutes. Are you looking at 2-minute charts, Zephin? I'm going to move you back over to Active Trader Pro and post this thing. Let's look at GNS. Did it break 6? Because it was on a run. It broke down. Yep, broke down. Your VWAP is at 550. So that is kind of your base, your VWAP, in my opinion, 550. See, it's right above that 9-day at 554. But 550, if I were trading it, I might look at 550 as kind of okay, if I think this one's going to continue up on that trend line, I might look at it doing that. Let me save episode. Day trading. Let's see. Should you short Apple into earnings with, what is it, AAPD? Fed, earnings, and jobs. Trading for Wednesday and Friday. 1/31/23 update. Today is the last day of January. We're going to put that in. We're going to put this in. DRV. 4233. Trigger. Okay, and then I'm going to go to Anchor. You're not missing anything, Christian. The difference between, I think, Webull price targets and like a Fidelity. Let me log into Fidelity and see if I can. I'm going to see if I can find a good stock to kind of show you the difference between Webull and Fidelity, but oh, stop. Copy, paste. What the hell is going on? Let's see. We're gonna go down here, and I'm gonna copy and then paste. And of course, nothing's happening. Oh, let's see. We're gonna cut. Oh, that's not even coming out. Let's publish, and then I'm gonna go back in and I'm gonna edit this, and I'm going to do okay, and oh, there we go. Put that in. We're gonna copy and then paste. Oh man. Okay, why is this? Okay. I'm gonna go to episodes, and we're gonna go to a different episode. Boom, boom, boom. Paste. Okay, that's just wrong. We're going to revert to draft. Okay. Episodes. Boy, this one could be screwed up. Let's just copy. We're going to take all this out. We're going to put that in. We're going to put that in. And then we're going to copy. And we're going to... No, it's that's causing the problem. So let's see. We're going to edit. And then we're going to... Oh, why won't it do any of this? Update episode. I don't want that. Why can't I do this? Oh man, I'm really boring you guys, but let's see. We're going to copy, and let's see if this pastes. Nope. Paste. Nope. Publish now. We're going to, nope. Edit this. Okay, we'll just have to type it in. We're gonna have to type this in, I guess. Copy, paste, copy, paste, copy, paste, and oh, no. Copy, must be the notes. Copy. Oh, is it the use code DSP? That might be it. Oh, here we go. Wait, update episode. Let's see. We're going to edit. Did I reach the max? Yes, I did. That's what it is. We're going to take this out. I'm going to take these out. Why can't I take those out? Okay, and we'll go to this one. That's why. I'll take out that. Okay, we'll say that. Boy, I guess I was super wordy with a lot of stocks. Okay, that's why it wasn't letting me do this. Okay. Let's see if this lets me do this. Nope. Okay, we're going to have to do... Oh, man. I'm going to take out this. Why won't it let me delete this? Update. Okay, now I've got to delete a bunch. I'm going to take this out. And I'm going to put copy. And then we're going to put in this. There we go. We'll do this. We'll just put in that. Okay, update episode. There we go. And I think I finally got it. So analyst recommendations, Webull wants to put those in there because they want analyst recommendations. It's a stock that probably doesn't have analyst recommendations. I don't know how they go about. Let me see. How does Webull put in analyst? I don't know what the hell this is, but yeah. I would ignore them. That's just my bet. I am going to tweet out this. I bet it's going to put the fucking anchor thing again. I don't know. Let's see. We look at SPY. We're going to look at QQQ. SQQQ. We're going to put in Tesla. We're going to put in and I'm going to put in our short plays, because that's going to get a bunch of fucking views. And then we'll put in SPXU, Snap, it's got my picture back up on there again. Good. And then we're gonna put in GM, SDS, pins. We'll put in PFE, XOM, GNS. I think I had that one in there, but we'll put that one in again. CAT, ABML, plug, RV, DRN. Okay, just 2 tweets today. Okay, and I am, let me see, episodes. It is funny, man. Whenever I say buy these stocks in the title of the episode, people fucking listen. When I put in something like, let's see, big movers this week, market update 130.23 yesterday, nobody listens. Nobody freaking listens. Let me look real quick. Hold on. Let's look at yesterday's. Yeah. It got some views. Okay. REI about to break out. Let's look at REI, because it does look like GNS lost all of it. Now the VWAP's down at 5. The VWAP, ironically, is at 549. So you're well below your VWAP. Volume weighted average price is what that is. So essentially, look at all this volume that's high up there. There's a lot more people holding up here, which should drive the price up. REI. Let's look at REI. Is it getting ready to break out? Doesn't look like it. This is one where, again, you got to be worried about your volume is lower on the 10-day than on the 90-day. And so let's go back to take a look at the algorithm on this one, because I think I got people in on the algorithm on this one. And then I'm heading out of here. I'm getting out because I got a big, long to-do list. It does have that ascending triangle. Got you out with a 0.64% loss. This one, ironically, the algorithm wins you 187% versus just 90% buying and holding. 42% wins. Your average win is 24%. But it does have some debt issues. The last time I looked it up. Let's see. REI. You got a PE of 2. August 21st, $7.50 is the price target. 7 penny stocks that will make you rich in 10 years. Let's see what they say about REI. They have REI in here, Ring Energy. Let's see what they say about Ring Energy. Prior and immediately following Russia's invasion of Ukraine, the topic of fast-trackable renewable energy infrastructure, it's understandable. Ring Energy commands exceptional relevancies. Forget a decade down the line. We can talk about multiple decades. Ring Energy will probably be relevant. Thus, you can have confidence in Ring ranking among penny stocks that will make you rich in 10 years, primarily when you compare the capacity factor to or the measure of the reliability of all energy. Further economic realities will keep many folks tethered to hydrocarbons. Sure, electric vehicles are amazing. Sadly, though, the average price of EVs rings higher. This is oil and gas exploration. And yes, you can say, yeah, here's the problem that you have. 2020, $36 cost of revenue, $15 cost of revenue, but total trailing 12 months, $21. So it's getting a little bit more expensive. Gross profit, it's getting better. 10% owner, he bought at $2.67. $1.3 million worth. William Cruz. You're at $2.33. So I don't think Ring Energy is a bad one. I just think you've put in this floor right here. You can even see it down here, down at 224. You've put in that floor, and what's pushing it above? Your earnings per share this year, 100%. Next year is 22%. Year to date, you're down 5%. So there's no real analyst that's kind of looking at this. Their Roth Capital is saying $7.50. But I don't know. I mean, it's REI anytime now. REI shit was hoping for 219. Oh well, get your ass up there. And it's the same person that's pointing that out. Keep shorting oil down all the way. REI's got some momentum, but the volume still is just. I mean, what pushed this up here to the $3 range? Look at the volume. You want volume in this, and you just don't have it. It's just not gotten the volume push that it's gotten, back here in May and stuff. So I don't know that you've got a hope and a prayer there, but let's look at GNS, and then we'll look at our Bed Bath & Beyond. GNS has lost it. And then I'm going to look at Carvana, because Carvana actually wound up getting to like 11 today, and it's actually losing money. The market is gaining some steam right now. Here's your Bed Bath & Beyond. It had some hope here in this candle, which got up to $2.96. But ever since then, just has kind of lost it. The volume, people are dead on it. They're not real happy with it. We'll look at WISA too, CNVA. We're going to look at Carvana, which is down at 980. CV, why am I doing this? Dyslexia. CRSP, CRISPR is good. Carvana has lost all of its momentum. I think you're looking at $7.25 by the end of the day on this one. You're at 30 million shares already. Your average 10-day is 31 million. But see how you're losing? It's going up a little bit. But that MACD is about to cross over. Your RSI is down at 34. Let's look at WISA, and then I'll look at CRISPR. WISA's lost. All your short trades today have just, they've lost it. The market's going up. I mean, the earnings were good. I mean, again, the consumer's being in a good place. It'll be interesting. I think tomorrow is going to be an interesting kind of speech. CRISPR, I think I brought it up that they had a cross up. Hold on. They had a cross up. We'll go back to Safari. I think I brought that up yesterday or something. They had a secondary cross up. Yeah. You've had a couple of cross ups on the way down, but I said that RSI was just too much. I think you've put in a top here around 51. The earnings will be interesting. Is Cat dead? Let's look at Cat on an Active Trader Pro. Yeah. It's not dead. It'll be interesting to get it back to 263 to where I bought it from. But I'll probably take the loss on it this week and look to buy back in, later next month. See, and here's what you have to know about Cat. We'll go into Safari. And I was fully knowing this when I bought this yesterday. You're buying into strength. I mean, look at that strength. You came all the way from October from 165 up to 250. It was no doubt in my mind that people were going to, that the earnings had to be a blowout. And you just know people weren't blowing out earnings. You look at the volume shelf that's here. This one's probably going down to the 240 range, I would say. If you break this 244 on a closing candle, I think you've got 240 right in your crosshairs. Dead cat bounce. You know what's interesting? And I continue to say this, Target. You still got strength in Target. I mean, that RSI is super high up there, but up to 176, that's the first gap. You got a second gap that goes back here to 179. Your third gap is at 212. And I don't think it's out of the realm of possibility that they get back to that 212. With a strong consumer, shit. That ain't too far. You hold that 200-day and you get that 50-day golden cross right here. You get another bump up. Target, man. I'm telling you. Taiwan Semi is in our core portfolio. This one's down 2% today. I think you're heading back to this gap at about 80. I think that's a buy time. Moderna is down at 174. I said it on the podcast today. I'm just not Moderna is a one-trick pony, and it's COVID, and so I think you have a problem there. I do. I really, really do. Let's see. Did everybody hit the thumbs up? I don't even know. Let me go back in. I'm going to close out, and then I'm going to go back in. Not everybody hit the thumbs up, but a lot of people did. Live chat. Okay. Okay. I am out of here. Again, if you're in, I would urge you today, if you have TrendSpider, take a look at the core portfolio that I've got and take a look at how good these stocks are doing, how well these stocks are doing, I should say. How good. You got all green. Taiwan Semiconductor is red. Moderna is red. And Moderna, I've said, I moved it into the core portfolio, but it's only because I like trading it so much, not because I want you to hold it. J&J, It's down. It's at 161. Cleveland Cliffs is down 0.6. Bank of America is down 0.6. Everything else is way up. Amazon going into earnings. I say Amazon under 100. You guys should have bought that one. You're at 103 today. 3% move in a day. Are you kidding me? So Noah, here's my thing on Pfizer. And I said this earlier. Pfizer is probably and here it is. It's in the core portfolio. I own this. I own 5 figures of this. It might be close to 15, 20,000 of this. I don't know how much dollars amount that I own. Significantly lower price because I have held this for a very long time. We're talking about probably even before this chart. I want to say it was like 2009, 2010, somewhere in that neighborhood. Even before this chart, if I go back to a monthly, and you look at, it was around this time, 2009, 2010, that I bought around the $15 mark. So am I worried that we're at 43 when we were at 57? Not really. It's touching that 50-day and it's going to go under that 50-day. Here's my thing about Pfizer. I listened to the All In podcast, and if you don't know it, look it up. It is a fantastic podcast. These are 4 friends who basically are billionaires who just kind of talk like they're around a poker table. And a mix of politics from very liberal to very conservative. And all 4 of them said they will not get another booster for COVID. Doesn't mean that Pfizer isn't, Pfizer is protected. Moderna is not, because Moderna is a one-trick pony. But I think the efficacy of the vaccine against the new strains of COVID are questionable. I think what's also questionable is Pfizer's behavior at the beginning of the pandemic, telling people that in their testing, it prevented transmission, whereas it's now coming out, it most likely did not prevent transmission. And that came, there's a twofold here. Pfizer told everybody it prevented transmission. So then the experts started kind of spouting that off because Pfizer told them that it did. It was, they thought it was like the polio vaccine, is what Pfizer essentially was saying, is we're going to eradicate COVID because we can do this. Then all of a sudden, they took a U-turn and said, well, maybe it's like the flu vaccine where it doesn't really prevent it and we're not going to wipe it out and it's going to just lessen the effects of it. And it's going to become something that you're going to take every year. And remember, these guys have $1 billion business to protect. So I'm not a super fan of Pfizer. I am a fan of their book of drugs. And I think that it makes sense to hold it long term. Getting in, I would say you wait for maybe this 200-day to be in play because there is a hell of a lot of, God forbid, those Republicans in the House are going to freaking, be on top of this. So I don't want to say that Pfizer's a buy here, even at 43, even though when you look at my algorithm here, Pfizer is you had a buy here at 45, still hasn't gotten you out, by the way, because the MACD is so far down, and you're at 43. I don't want to say that it's not a buy, but personally, I'm not adding to my portfolio. Yes to both of you guys. AbbVie's good. AbbVie's a great one. AbbVie's got a nice big fat dividend. This was a COVID lover, and it has been out of favor from this one. It still doesn't have, even though you got the MACD cross up here, it's kind of like Pfizer, still hasn't really gained its momentum or button hook going into earnings. But they have like a 5 or 6% dividend, if I remember correctly. 4.06. So if you look at let's just look at a weekly of AbbVie. you're still not down around your probably base of 130. If you go back to pre-COVID where AbbVie was, you're a $100 stock. No joke. You're a $100 stock and you're trading at a 50% premium. So there's two podcasts that I listen to religiously, and it's just two podcasts. And I will let you know if I hear of any else. All In is great. My First Millions, fantastic. My First Millions is my number one go-to podcast, and All In is probably my number two. Let me look at what I have on my my Spotify list. No, Harley Quinn. Your library, podcasts, and shows. My First Millions, All In, my podcast, of course. Smartless, I love. That's with Jason Bateman, Will Arnett, and Sean Hayes. I love that one. The Money with Katie show. The Money with Katie. I like. I don't love it. Daily from the New York Times. Love it. All the Hacks with Chris Hutchins. He is a guy who's in my high net worth group. I like his to a certain extent. My buddy Steve has a really popular hiking podcast called The Letter N, the number 2, Backpacking. Subscribe to that one. I'm on there every now and then. And then The Problem with Jon Stewart's a pretty good podcast. I just don't listen to it a lot. And then Naval, Naval. And that's all I listen to. But My First Millions is my go-to. All In with Chamath, Jason, Sachs, and Freeberg. I really like that one. Baron Streetwise, I'll put it on here. Let me see. With Jack Hugh. I'll follow it. I'll test it out on my 10-mile run today. We study billionaires. Let me look. I haven't listened to this one. Oh, I did listen to one of these. We study billionaires. I didn't like it for some reason, but I'll follow it and I'll try it again. How's that? I'll like it and I'll follow it again. And Jay Martin show. Let me look at Jay Martin. Jay Martin show. Health, well, or happiness, but this is great news. I'll add it. I don't know that I'll listen to it, but I haven't listened to it. Okay. We've got our podcast. Now, when Spotify comes out with the year-end summary, my ass better be your number ones. Hey, I got a new subscriber. Yay. Let me see. Your channel. 391 subscribers. So I got to get to 1,000. You guys got to get me to 1,000 on YouTube. I'm telling you, there are tens of thousands of people that listen to my podcast. Getting them over to YouTube is impossible. Rich Dad Radio is good. I think it's good for people learning. I don't think Rich Dad Radio is good. I don't learn a lot from it. And I don't say that thinking that I know everything. I say that in that I think that's a lot of what I learned 10 to 15 years ago. And it's probably a good refresher for me. But if you're at a certain place in life, I think Rich Dad Radio becomes, I think Sherry and I are similar in our stages in life, I think. So, and Mike, yeah, it's all about clickbait. I'm finding that out. Ironically, I'm just finding that out now. It's all about clickbait. Cat looks like it's putting in a 250 base. We'll go over to Active Trader Pro because I do. Carvana's lost all of its mojo. Let's look at GNS. Did this break 5? $5.30. That's kind of lost its mojo. Bed Bath & Beyond. Let's see if this lost its mojo too. 266. Yep. Sherry is here. I think Sherry would agree with me. If you listen to Rich Dad Radio, there's a certain place in life where you're just like, okay, what he's telling me, I already know. And by the way, I will tell you guys too, when you get older, you understand how much your parents actually sacrifice and how much your parents actually know. Call me daddy, bitches. Okay. I am out of here. It is 11 o'clock. I got to go do my list. Just so you guys know here, what's my list? I have got my to-do list today. Call the vet for the dogs, return shoes to Zappos, fertilize the lawn with pre-emergent, clear the drain out of the backyards, rake the leaves, dump the grass clippings with the wheelbarrow, edit my TrendSpider video, find a keyboard because I'm taking piano lessons, got to go food shopping, got to wash the car, and I got to get a filter for my car. Boom, boom. That is my day, and I have to fit in my 10-mile walk. So I got a lot to do. Okay, all you degenerates, I'm out of here. Is AKAN? Let me see. She's got grocery money in there, so maybe she goes hungry for a week. She does intermittent fasting like I do. AKAN is no joke right now. My friend Shiva's a dentist. By the way, Sherry, if you live in Atlanta, DM me. I have the best dentist for you. She is awesome. See what nice teeth I have? And these are actually natural teeth. AKAN is no joke. This could be a triple bar. If that one gets red, you have, let's see, this is high of 32, low of 29. So you have a 10% candle right here. You have a high of 34, a low of 31. So you have a 10% candle here. These ain't baby bars. These are 10% candles. If you move to Atlanta, Sherry, let me know. Shiva, my dentist, she's Persian. She is awesome. Really good friend of mine, buying her own practice. And she's like, you got to tell your rich friends to come to me. Okay, we've got 1 minute left in this bar. If that's a red bar, we got a triple bar going here. Because the next one could be green. Did my active... I'm going to go back to it. Because I think... See, when I got OBS up, I can't do day trading with you guys. I got to do it on my laptop. Did it halt? Did this freaking halt? Boom, 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 boom. I think it halted. Nope, didn't halt. It got a green bar though, but you're up above there. Oof. Look at that move. Okay, I'm out. I do have to